Hey traders, Todd here. What's going on? So let's just do a little video about Fibonacci, right? So this is a staple of my trading. And there's a lot of misconceptions out there, that's pretty popular. But there's a lot of misconceptions that it's too subjective to be useful. There winds up being all these 1,000 ratios like splattered all over your charts, and you don't know which one to rely on, right? So I think we go about applying Fib to the markets, and I think in a little bit more of a methodical manner. So let's do some live analysis on the markets here. We have just about 10 minutes before the close here, so maybe we can put some trades on. I'm thinking about this Google trade here. So first thing, guys, is you have to determine the trend of the market, right? And this is even putting Fibonacci aside for right now. Like if you're trading, you have to determine what kind of trader you are. In my opinion, the easiest way to go about trading the markets is to, one, identify the trend in the market, and two, is to find the corrections against that trend. So all that means is if the market is in an uptrend, it's not going to go in a straight one-way manner. There's going to be short-term setbacks or corrections before the longer-term trend resumes. So guys, like 70 to 80% of the trades that you do should be directly in line with this saying. You want to buy short-term weakness in rising longer-term uptrends, and you want to sell short-term strength in longer-term downtrends. So if you have an uptrend here, your whole purpose in trading, guys, like your whole MO, everything you're trying to do in the markets is to get involved in the market right about there for the new swing up. Get out, get back in right about there. Like all these crazy indicators, methodologies that we use are designed to do just that. Now, there are times with the proper methodologies that you can say, all right, I am going to try to actually counter trend trade this market and go against the trend. And there's very few methodologies out there that can teach you to do it. Those trades should be few and far between, but I can teach you how to do that. For our purposes right now, let's just focus on the trend. We're going to be looking to buy pullbacks in uptrend and sell rallies in downtrends. That's your goal in trading. That's it. So first, how do you determine the trend of the market? Well, it's pretty simple. One, you just kind of look at it and say, well, this Google chart is starting from the bottom left-hand corner and heading up to the top right. I would say you have a big old uptrend here, and you need to be thinking in your mind longs only. Okay, and this is kind of like, this is something that I found, I kind of remember as a newer trader. Maybe you were into this, like maybe you feel this way, but you see the chart kind of like bumping up against the upper end of the chart, and you're like, oh, I don't see any space on that chart above here. It's got to return back down. Are you thinking short in this market? See, I think that's a mistake in the beginning. What you got to realize is you can just change the chart, and there's plenty of upside room. Google could go to $1,200. Like you can move the chart around and put price anywhere. So I would say respect the trend. And the way I identify the trend of the market is with the DMI, the directional movement indicator. I set the default up to 55. And basically what this does is it shows you a histogram. The zero line, which you can't really see because Google's mostly been in an uptrend, but while we're in the green, Google's in an uptrend. Okay, if you see any red, which let me scroll back, there's a little bit of red there. For a short period of time, Google's in a downtrend. So I basically try to align my trades with the direction of the DMI. And that's pretty much the extent of what you'll see for me using indicators. Okay, so Fibonacci tool number one is Fibonacci Retracements. What they are trying to do is, one, help you determine the trend of the market. Two, figure out how far a pullback might last, giving you the opportunity to get on board for expectation of the resumption of the uptrend. So on Thinkorswim, what we do is we hit the drawing tool and we go over here to this percent sign right here, which is Fibonacci Retracements. I'm not going to go into full detail here, just out of the interest of time. Excuse me. But where do you start and stop your Fib retracements? It's easy. Number one, you find the trend of the market, which is up because we have the green oscillator. Number two, you find the most recent blue dot low. Okay, and this is an indicator that you can plug into your charts. So there's the blue dot low. I'm going to click once up to the very top, and these are certain oops, let me try that again. These are certain retracements or percents of this prior rally that the market could recapture before finding a low. And if we look at what Google's done, look, here's the 38%, the first of your Fib retracements. We tested it, really nice 50-point bounce here in Google, and then we sold back down. We broke through the 38%, so I'm going to get rid of him for now. and we went right down to the 50%. So that's interesting. My buy zone is anywhere from the 38 down to the 78% retracement. Now, you can't figure out which retracement to use and which one's going to work. You have to add more to it. So here comes in, that's not good English, but you know what I'm saying. Here's where we bring in Fibonacci tool number 2. And before I show you Fibonacci tool number 2, just think about what we just did. We just studied the most recent, oh, that's a horrible bracket. The most recent trend wave, which is from blue dot low to blue dot high. And we are trying to figure out how far this correction or what percent of the prior rally might be recaptured before we get the uptrend resumption. All right. Now what I want to do is rather than study trend wave to predict corrective wave, I want to study prior corrective waves to study the ongoing corrective wave and figure out how far this guy might last. So we're going to study this guy and apply him to the current correction. We're going to study this guy and apply him to the current correction. How do we know that we want to use these two corrections? Guys, these blue dots are really the key. These are your major swings, and they're just a real quick visual aid. And what that basically means is this high bar is not exceeded in 13 bars before and 13 bars following. This low bar here was not exceeded in 13 bars before, 13 bars following. So if you have a swing high or low in the market that is not exceeded in 13 bars before or after it gets a blue dot, they're just the most significant turning points. So now what we want to do is go over to drawing tool and pull out Fib tool number 2, which is Fibonacci Projections. So get down here, right here, Fibonacci Extensions. Now, Thinkorswim made a mistake, and a couple other charting platforms have done this. They're not actually called they're not called extensions, they're called projections. All right, so we're going to click it. Now, this is going to be a 3-click process. So I'm going to study the depth of this correction by clicking once, and I'm literally on my cursor here. I'm going to click a second time. And then up here, I'm going to go off the top of the ongoing correction. I'll click a third time, put it right in the microphone for you. So it's just 3 clicks. All right. And now what we're going to do is start to build a zone. So here's the 100%. The distance from the high down to the 100% was exactly equal to this swing right here. That's called symmetry or measured move. And that gave us a nice low for a period of time. We double bottomed and rallied up. But we'll get rid of him, because he was ultimately defeated. The 1272 came in, and oh, look at that 1618. So take this distance, let's call it, I don't know, $50, multiply it by 1.618, whatever that is, projected off from the 1008 high in Google, 161%, that's your golden ratio. That was the low. Okay, and now let me just get rid of these other guys. And it's important to get rid of Fib, because otherwise your charts can get very cluttered very fast. Now let's also do this guy. Let's do this blue dot to blue dot swing. Click once, click twice. Go off the top, 1008. And I'm just going to make him a different color so we can distinguish between these 3 Fib studies that we're looking at. And I'm just looking at ratios we're not going to use just to keep them clean here. Okay, so 61%, we're going to get rid of you. You didn't do anything for us. 100%, we did it. We had a double bottom there on the 100%, moved up. 1272, and there we go. So, guys, can you see the zone of support? So we have a high level right here. In fact, we can get rid of the 1272 because it really didn't do anything. But there's a yellow level, there's a purple level, and there's a teal level right in here. And then there's 2 more which are right on top of each other. Guys, there's a big zone in Google between 917 and 894. I'm a little late recording this video. Your ideal entry, my ideal entry, was back here in one of these 2 candles that have held that Fibonacci support zone. That's support. This is where you want to be long. You want to put a stop just below this market. How am I doing? Market's going to close in 2 minutes. I'm going to put a little put spread on right below the market. Google's at a high implied volatility. I don't think I'm going to be able to put the other trade. I'm going to do it in video with you, but I'm just going to trade this thing live because I like it. I'm going to do 14 days out. We're trading at 942. 941. I'm going to sell down to support. We'll do like a 925, 920 put spread. See if I can get it off where the market closes. So 925, we're going to sell vertical. 925, 920, you're taking $1.15. That's fine. I'll put a couple on there. We'll sell 3. Try to make 345 bucks. And we're going to sell, let's go $1.20 and see if we can get filled. Ooh, right away. $1.22. All right, we'll take that. All right, so that's fine. Now, also, let's do the same thing on NVIDIA. Oh, wait, you know what? There's one thing. Oh, you know what? There's one thing I forgot to tell you on that. You can even, I'm going to go on the daily, go down to one more. Let's go down to 195-minute chart. One thing I forgot to tell you. You can also use these Fib projections for studying like this A, B, C pattern. Okay, you can study this swing compared to this swing, and check this out in Google. There's some crazy Fib going on here. Drawing tools, extensions, click the beginning of that swing to the end of that swing, and then do that distance right here. Market just closed. Okay, so 1,008 down to the low here at about 936. Back up. Let me just square those lines up, get them right in the swing points. Here we go, and right there. Okay, I'm gonna make this yet a different color and keep them clean. That kind of mint color. All right, and check this out. Oh my God, do you see that top 100% right there at 918? I mean, that's like, I'm like 2 days late doing this video. I should be in about 920. Like, you can put these entries in. Like, this is what it's like. This is having premium, you know, basically it's like having tomorrow's newspaper today, right? This is preparing for your trade. If I'm wrong and that zone of support doesn't hold, we have such a tight stop, it's no big deal. And I'm going to put my stop below this Fib support zone, so that's fine. But again, I'm not getting an ideal entry here. All right, so let's go over to NVIDIA. Let's do this one as well. Okay, so let's go to the daily. I'm going to go a little faster on this one. So we have DMI in an uptrend. So first thing, we know we're in an uptrend. Let's go over here. Let's go to our Fibonacci Retracement tool. Where's the most recent blue dot low? There it is. Click once. Click up to the high. And we went right down to the 38%. Okay, that's cool. We'll get rid of these guys. Also want to do 2 corrections that are capped by your blue dots to figure out zone of support. So let's go over to here to your Fibonacci projections, which are mistakenly labeled extensions. So we're going to click once, click twice on those 2 blue dots, off the high, and let's see, 618, 100% didn't do anything, 1272, and there's 1618, which 1618 and 200% did a nice little job for us. And then let's also study this blue dot to blue dot correction, off the highs. I'm going to change the color to distinguish them. And let's see where the clustering occurs. Guys, this is, this is what I'm talking about. Like, this is the turning point that you want to have. This is a beautiful, and actually the entry is today because you got a big candle that sold down into this zone of support from 144 to 135, right? Then after the red candle, you had, what is that? I'm not good at my candles. Spinning, whatever. It's an inside day, which means the highs and lows are contained within the prior day. The next day actually did an outside day compared to this guy. But a good reversal is when this big engulfing bearish candle, the high of that is taken out, which was today. That's a really good signal. And you can put your stop just back below the low of this bar, or if you want to put it back below this Fib support at 134.50, you can do it. If you want to put it below this candle, which is fine, at 137, or if you really want to be tight and put it below here at 139, you decide, right? So the most important thing here, guys, is you know where your entry is, and you can have a clearly defined stop. You're not waiting for some indicator to like get oversold and stay oversold and just kind of flip around and get confused. You know exactly where you want your stop to be. If you know where your entry is, you know what your stop is, you know how to position size. When you know how to position size based on your risk profile, like, you're acting like a professional trader now. Okay, so that's how you plan a trade using Fib. All right, so I know I threw a lot at you, but this is where we're going to be heading as you continue your education with tradinganalysis.com, myself. And with that, we'll leave it there. Happy trading with Fib, and we'll see you guys soon.